When should I sell or will I ever sell? People keep telling me with Bitcoin you can save money. Yeah. It's a place to put money aside. It safeguards your wealth from inflation, which eats away at it stealthily. At what point can you withdraw the money from your savings? On occasion, sure. Coffee isn't something you buy with your savings. Buying a shirt shouldn't require you to go into your funds. For large investments, large purchases such as college tuition, or to support 1 year of retirement, people take money out of their savings. People will transfer their savings into Bitcoin, which is how Bitcoin will work. The value will keep going up. Many believe the current bull market in cryptocurrencies will be the largest in history, and it has only been a few months long. Investors have again another fantastic chance to profit handsomely from their assets and escape the quickly deflating currency system. Some Bitcoin investors believe that trying to time the market such that they sell at the exact peak, just before the terrible drawdowns of bull markets, is a good strategy. If you're selling your assets for nefarious reasons, though, Morgan Creek Capital Investments founder, chief investment officer, and managing director Mark Yusko warns against trying to time the markets. In a recent interview with the Dales Report, Yusko emphasizes the need of preserving your crypto assets, particularly Bitcoin, for the foreseeable future. He claims that Bitcoin will serve as the basis for the next worldwide monetary system, not because its value is rising, but because all fiat currencies are depreciating at a rapid pace. Yusko is sure that the top cryptocurrency will always be appreciating. He cites the sharp depreciation of lesser currencies over the last year, such as the Argentine peso and the Turkish lira. To give just two examples, Bitcoin's value has increased by more than 400% in the last year when evaluated in Turkish lira, and more than 1,145% when measured in Argentina pesos. The frantic race for Bitcoin through spot Bitcoin ETFs is another topic Yusko brings up throughout the interview. According to Yusko, who has worked with institutional investors for decades, this is only the start of the deluge of capital that BlackRock and other issuers have poured into Bitcoin and the cryptocurrency market as a whole. In general, Yusko is extremely bullish and thinks Bitcoin and other leading cryptocurrencies will do really well in the market. Here are some excerpts from the interview, but before we get to that, I'd really appreciate it if you could hit that like button, subscribe to the channel, and enable post alerts so I know when new videos are up. Your efforts are greatly appreciated by the YouTube algorithm and play a significant role in the channel's growth. I hope you take pleasure in watching the video. These ETFs are known as spot ETFs, and they are traded in response to orders received by either BlackRock or Bitwise. After receiving an order, Fidelity must locate real Bitcoin. Buying futures contracts and acting like they own Bitcoin won't get them anywhere. The last week has seen a wild race to acquire Bitcoin as GBTC sold all of the dollars that BlackRock, Bitwise, Fidelity, and Valkyrie needed to buy in the beginning, and for a while afterward due to their reasonable decision to keep their fee really high. Although I find it unappealing, it was quite astute. Look, they're saying most of our GBTC trust investors got in at substantially lower prices. With each fresh influx, the amount that was available to purchase increased by 200 million, 400 million, or 500 million. They still needed to come up with 10,000 Bitcoin on some days, even though nobody was selling GBTC. Daily production is a meager 900. There was a huge disparity between supply and demand, and word on the street was that over-the-counter desks were practically empty the day before or yesterday. There was just no Bitcoin available for purchase. I was just on Kraken exchanging what I would not call a vernacular token for one that I thought was good but was actually terrible. I kept getting the message not available when I tried to exchange it for Bitcoin. That in no way indicates that they are out of them. The issue is with the price. It's not like Bitcoin doesn't exist. Plenty of Bitcoin is available. Well, let's just say 15 million. Approximately 3 to 5 million have been misplaced or stolen out of a total of about 19 million. Thus, 15 or 16 million Bitcoin exist. Thus, Bitcoin is abundant. The issue is that there are a large number of them. Something like 65% of the people have expressed that they are not willing to sell at this price. The general public will find it difficult to comprehend this. Because there are exactly 2.1 quadrillion Satoshis in circulation, my Twitter handle features the hashtag 2.1 quadrillion. A Bitcoin, thus, is worth 100 million Satoshis. Thus, there are 2.1 quadrillion, which is an extremely large number of zeros. I understand. The thought of a Bitcoin worth 1 million, 2 million, or $5 million is going to absolutely baffle people. I simply do not have the funds to cover that. Buying Bitcoin isn't necessary. You have the option to purchase 1 Satoshi, which is equivalent to 100 million Bitcoins, or 10, 100, or 1,000 Satoshis. In my opinion, we need to turn a switch and begin discussing Satoshis at some point. In addition, Satoshi Nakamoto himself revealed in these letters that he chose the 21 million as a target since it turned out to be a universal currency with one Satoshi equivalent to $1. Yes, that does the trick. In the end, I believe that one Satoshi is equivalent to approximately 0.70 cents now. Despite my best efforts, I am unable to mentally complete that calculation. However, eventually, the concept that this item can be divided into 100 million units will become widely known and understood. According to Metcalfe's law, the value of a network is directly proportionate to the power of 2 times its user count. If this holds true for Bitcoin, then its value will increase as more people use it and join the network. The value and utility of the network will increase at an exponential rate as more individuals join, but this growth may be too big for some to fathom. One well-known tale that tries to illustrate the significance of exponential growth is the one about an Indian king who offered the chess inventor the reward of the amount of rice that could be obtained by placing 1 grain on the first square of the board and then doubling the amount on each subsequent square. At first glance, it appears to be quite simple, and the inventor is still short on rice less than 15 grams at the 10th square. The pot of gold, however, increases to 15 kilograms of rice by the 20th square and 15 tons by the 31st. Another scenario is to double the amount of drops into a football stadium every minute, starting with 1 milliliter of water. The stadium's water supply is extremely low by the 40th minute, with just enough to cover the pitch. But only 4 minutes after that, it's full to the brim. This is Yusko's vision for the long-term expansion of the Bitcoin network, starting with the inevitable entrance of institutional investors via Bitcoin ETFs. Return to the interview with Yusko. Simple linear algebra isn't so bad, you know. The brain finds exponential mathematics quite challenging to understand. 20 linear steps would get me to the other side of my office. I can complete 2 full circumnavigations of the Earth in 20 exponential steps, and some people think that's ridiculous. Figure it out. A large number is obtained by raising 2 to the 20th power. Its shape is exponential if you examine it closely. Plus, at that point, it's exponential in 2 directions. It first creates enormous parabolas, crashes, and then creates still another parabola. Going from $1 to $10 is a tremendous percentage-wise move, right? What does it make, though? A parabolic curve, according to Metcalfe's law. Yes, 10 times. Adding 10 more to 20 isn't a huge change, but it is an additional 10. Consequently, the rule of large numbers becomes more applicable. But hold on a second. The amount of money flowing in is a crucial point that you made. Compared to Bitcoin's whole existence, I anticipate more fiat currency conversions into Bitcoin this year transactions, not paper, than in any previous year. I haven't done the exact arithmetic, but I estimate that there will be somewhere around 300 billion in the first 15 years. In my opinion, it's slightly lower than that. That's on a market cap of $2 trillion. That leaves us with 1.2 trillion. However, 1.2 trillion did not come in unless something went wrong. Yes, but that's not how it works. For example, if I wanted to invest $1 and you had $1 worth of Bitcoin, you could argue, you know what? I won't part with it for a dime. I'll make $1.2 off of that. I'm going to put $1.30 on it. I'm going to put $1.40 on it. Thus, the early adopters had to stake a relatively small sum to acquire a substantial quantity of Bitcoin. Some even mined it for free, so they didn't have to put any money in at all. As a result, there is a fixed amount of capital that has been converted to Bitcoin as it matures and new funds are invested. However, if we both trade the same thing, we aren't actually investing any more money. A multiplier is the name given to it. Because of this, some have speculated that the multiplier is close to 100. To me, it doesn't seem like that